Real estate valuation has various purposes, including financing, sales listing, investment research, property insurance, taxation, and more. As a real estate professional, it's vital to understand all aspects of real estate valuation, and today we're going to talk about one of the three real estate valuation methods, the market data approach. Hello everybody, it's Zach here from realestatelicensewizard.com. Welcome to the video. Today we are talking about the market data approach or the sales comparison approach. So let's start, like always, with some basics. How does appraisal work? Well, an appraisal is a professional judgment or estimate of a property's value at a given time. When it comes down to real estate transactions, appraisal reports are used by corporations, government agencies, individuals, investors, and more. An appraisal's purpose is to determine a property's market worth or the most likely price it would be in a competitive and open market. Now, it's worth mentioning the market price or the price at which a property is sold may not always reflect its actual value. For instance, if a seller is under duress due to foreclosure or if a private sale occurs, the property may sell for less than market value. So what are the three approaches to value? Well, there are three main approaches that appraisers use while they make an appraisal. They are the market data approach or sales comparison approach, the cost approach, also referred to as summation, and then lastly the income approach, also known as capitalization. Now, the market data approach, what we're talking about today, is the most popular in the discussion of sales, as it is referred to as the best in indicating the value of a subject property. It also presents a larger picture of the selection process, which can be quite crucial for a sale. So what is this market data approach? Well, the market data approach, also known as the sales comparison approach, involves comparing a property to other recently sold properties in the same area of similar size and condition. For residential real estate, the market data approach is typically regarded as the most accurate comparison method. The market data approach is also ideal for new or unused lots. It is a lot easier to directly compare new lots of properties because there are few variables on the properties. Now, the main items used in the market data approach are as follows. So building age and condition, if there's economic changes between the date of sale of a comparable and the date of the appraisal, the date of sales used. Because similar houses might vary in price from one neighborhood to the next, it's important to consider location, terms and conditions of sales, such as whether the seller of the property was under duress, as we talked about earlier, or maybe the property was sold at a discounted price. And then lastly, lot size, landscaping, building kind, quality, kitchen upgrades, garage, all that stuff, any physical amenities. Now, a good appraiser using the sales comparison approach should be able to name at least three comparable properties. In most cases, appraisers will use comparable homes that have sold within the last 6 months. Now, when comparing multiple properties, the more add-ons there are, the more variables to consider when comparing them. This is the most challenging component of the strategy. When comparing two or more properties, you must account for differences in features. So what are the steps to the sales comparison or market data approach? Well, the 5 steps are as follows. 1, study the market. 2, collect and verify the data. 3, analyze and compare the properties. 4, adjust the price of the comparable, also referred to as comps. And then 5, reconcile the newly adjusted prices. These steps help necessitate a direct comparison of the subject property, the one being appraised, to the other one or to the other sold or listed properties by the appraiser. The backbone of general comparative market study is the sales comparison approach. Now, a general comparative market study compares the prices of recently sold homes in the same geographic area. Now, the strategy frequently comprises of examining nearby homes to determine what they have in common. Appraisers can then determine a property's value depending on its attributes. Let's put this all into some examples to help you understand better. Suppose you're looking for a large property and find one with exactly what you want. It's a cute property with 325 acres. The bank hires an appraiser and he starts his work. The appraiser discovers next door a 350-acre lot was assessed at $850 per acre just 2 years ago. Right next door from that, a 300-acre property was valued at $450 per acre 16 months later. The $400 per acre gap between the two figures comes off a bit startling, especially given it was within 16 months of each other. Now, upon further investigation, the appraiser discovers that the $850 appraisal was done for a property owner who was facing foreclosure. The $450 valuation was for a landowner who was facing a federal estate tax. The properties were similar. They were similar in size. In terms of advancements, there were very little. But the main difference, however, was in the properties and how they were sold. In this example, the appraiser more than likely would disregard the $850 property appraisal and would end up incorporating multiple comparables to find the most accurate assessed value. Here's another example. Let's say the home you're looking for to purchase lists at $330,000. A similar home with the same 3-bedroom, 2-bathroom floor plan sold for $380,000 around the corner a few months prior. With the market data approach, your assessed value could increase because the house sold for a higher price. Granted, that's a simplified version of the process, but on paper, that's how this approach works. So what do you need to know for the real estate exam? Well, for the real estate exam, it's essential to understand fair market value of properties and how that is determined. Remember, appraisers use 3 different approaches, and the market data approach is the most common. This approach involves comparing a property to other recently sold properties in the same area of similar size and condition. The sales comparison approach, or market data approach, involves 5 steps for determining the value of residential properties and other types of properties. Keep all of this in mind and you should succeed come exam day. Do you still need help with real estate valuation and appraisal? Click the video here for more, and like always, make the day magical. See you guys next time. Bye.